It's good to see. I mean, people watching will probably be able to guess some of the technical analysis that I'll be talking about for Bitcoin in the not too distant future, because of course I've got all those lines and everything already up there. As you can see, like I said, resurgence in Chinese tech, and here's a couple of trades. Sometimes, you know, it didn't necessarily work out, but we had our nice and tight risk on this one. The next one is absolutely, of course, flying. I know that these trades actually did work out for sure, because I actually took this second trade, and you can see that it went all the way to the profit taking zone, but it's now backed away a little bit. Chinese tech, I think, has still got a great story ahead of it, but structurally you can see Baba here hasn't really taken out its prior lower highs, and there's still the threat of the flash down below $85. So it's probably best to look actually at this one on the foreign market, the Hong Kong exchange, if you're looking for better candles, because look at this, it's already a cleaner chart, and it's more or less the same, right? But it trades in China earlier than you know, before America. China's day is already begun and ended before Americans get to bed. So if you are trading this one, it's going to be something during the American trading day, will later on be reflected in the Chinese market, or if something happens during Chinese hours, be later reflected in the American market at times. But then a lot of trading platforms will let you trade this 24 hours, and the American one is on a lot of platforms can get trading 24 hours anyway. So you're kind of, if you're from America, probably best off sticking with trading the American ticker, whereas you can do analysis for sure on the Chinese one. And I just thought I would, since they're more or less the same anyhow, these charts. And this has been a great recovery so far. The way I like to measure these sorts of recoveries is using Fibonacci. I'm going to overlay my own Rocky Outcrop indicator here for this one, so you can see that this is exactly how it would be on a logarithmic chart. Doing it manually, as I like to do, just lines up perfectly, and you can see that so far the retracement's been as high as the 618 golden pocket just in there at the highs of around 120, and it's pulled back down to 114. The target for this would probably be more up towards 136 if you wanted to push it for the full move up. I do like to aim for an 886 on it after a V-shaped recovery like this one, but it's always a case of not taking out the lower Fibonacci retracement zone. If it does, then you get a bigger retracement back. It's just a pretty straightforward way of looking at things. So here I'm going to highlight Fibonacci zones for us so you can see this particular area is of interest. Prices drop down below 113 and close down there. It could be even all the way back down to $100. $99 would be an easy enough risk management zone for a trade later on this one. The reason why you'd be looking like that is because, as I say, after a V-shaped recovery, so we've had this drop down and then this large V back up again. After a V-shaped recovery, if you take out one of the Fibonacci levels, this, here's that highlighted the Fibonacci levels in black so you can see them, then you're really likely to go on to the next Fibonacci level, seeking out the liquidity, because all of this rising up has been so sharp and steep up the way. So from a technical analysis point of view, it makes it so that you can trade it with really tight risk if you're wanting to continue to be long on this one, that is, at each of these Fibonacci levels, without letting yourself be exposed to huge moves in the market. You can trade it towards the next Fibonacci level for an always pretty decent risk reward if you have run a tight stop loss, or you can trade it up towards like the proper large target. So you know, you can look for really decent risk to reward ratio trades on this one. And rather than predicting price on this, I'm just going to continue to suggest that this is exactly how you could think about this, all the way down towards the prior lows again, because just like on the move up, you would actually be aiming just from Fibonacci type idea. If there had been a problem here for us, they're going to get proper retracement back down towards the 886. Should take prices down towards 95.81. This is where I'm going to pop this latest one. And one of these moves would probably work out to the extent that it would pay you back whatever you lost on any individual trade multiple times over. So it's kind of how I'm thinking about things. Now, you could see a candle which looks like this, and it's got a wick on it, come down and touch off some sort of level where you've got your risk to reward straddled around this sort of hypothetical example I'm drawing, come into this area and push back up again, in which case all of these small risk to reward trades, small risk high reward trades, are being completely, catching this knife on any retracement and bouncing straight back up to the top really easily, and not, making it so that it's a very cheap trade. However, what can also happen is that the prices can push down, take that out and waver around. So for a lot of people, if you are trading this as 24-hour time frame, then you can use smaller time frames to see if prices actually drop down into the risk to reward zone and then back up, and then buy it on the resurgence back up again after you've seen it taking the level out, in order to be able to minimize that risk and be on side with the current momentum in the market as you're trading. You might look for something like for prices to come down and maybe put in a particular kind of candle formation, like a sort of hammer, for example, or to put in some extra signal for you. So anyway, we're going to just cut this BABA analysis here for just now. Alibaba is one of the biggest tech stocks in the world, definitely one of the biggest underpriced tech stocks. Around $100 is a pretty great buy on this one, generally, kind of roughly speaking, as a long-term type of hold, because the expectations in markets broadly are that Alibaba will at some point in its future take out the highs it had in 2020, and from here that would be like a 3x trade up from $99. So it's like, not a bad trade or investment overall. There are still some significant risks of further retraces back down to test off of the prior unsatisfied flash levels and so on below. So I'd be aware of those along the way for absolute definites. Here's the 4-hour time frame, just to give you a bit of a cleaner picture on the chart. As you can see, so these are the thoughts that I have on Alibaba.